to focus on Rivian, which I actually think could be contributing to some of the selling we are seeing in Lucid today, because Rivian is making a monster move to the downside. I mean, down almost 20% in the session on disappointing guidance and plans to raise more funds. The disappointing guidance just comes days after the company said it delivered more units than had been expected in their third quarter. So perhaps that initial rally we're just erasing today, more than that even though. So we did see this news Wednesday after the market closed that they said that sales in the current quarter would be slightly lower than the street had been expecting. Not news you want when you're still trying to, like you said, prove a concept.
Yeah, quite a bit lower too. They're suggesting that sort of cash and cash equivalents will be around 9.1 billion after thinking it was going to be somewhere near 10.2 billion. I mean, that's like 10% below what you thought. So you start extrapolating out. If you're an investor, you're like, hey, this isn't adding up. It should be going the other direction. You should be finding ways to be more efficient. You should be ending up with more cash than you thought, not the other way around. And of course, the revenue number not going the direction that investors would want to see either. Kind of right in line. These are the kind of companies that the leash isn't very long. They need to start beating expectations to get excitement going, not coming in line or even disappointing. So if you're spending more money, it has to have, tangible results to take away to shareholders or prospective shareholders or wherever they want to raise capital. And of course, doing things to raise capital only dilutes current shareholders' positions. So you look at that, not a lot of optimism exuding from Rivian today.
Right, and to speak to some of that share dilution that I think is the concern, the company is burning through cash. I mean, it sold trucks at an average loss of $33,000 in the second quarter. Their vehicles run on average for around $80,000, but making them isn't cheap either. So we have seen this name make some big swings as a result. We are still up around 10% since January 1 of this year, but almost 40% or more than 40% lower than a month ago. They've burned through about half of their cash, which is around $18 billion. Shares are down about 80% from their initial public offering back in 2021 when they did raise around $12 billion in that IPO. So the challenge for the company now is to reduce costs and streamline their production. They have to make this more affordable. They can't be losing $33,000 on each truck that they make. I mean, that is, to me, an egregious amount for a company that's still trying to prove its concept. They do plan to make a profit on their vehicles in 2024, but news like this, I think, dampens any enthusiasm around that. While we do have this target for them to be profitable in 2024, it's like, you can keep saying that, but you have to prove that you are able to do it. I can recall the days far too well when Tesla every quarter was like, we'll be profitable next quarter, we'll be profitable next quarter. And Tesla was not an outperformer like it is today, frankly, because of that. There was that lack of consumer trust in some of their profitability. Then, of course, Tesla did become profitable. We've seen it be profitable ever since, but Rivian still has such a long, winding road to get there still.
$30-some thousand a vehicle, it's unacceptable. And so they have a long ways to go. To be profitable, that means that number's got to be positive. So right. You said they're selling them for like 80-some thousand. Okay, they're losing 30-40% of whatever they sell them for. It's insane. It's absolutely insane. And so you start looking at companies like this when you have alternatives. In the case of Tesla, there wasn't alternatives in this space at the time when they were going through these growing pains. Also, interest rates were essentially zero. They were very low. They were able to raise capital a lot cheaper. They were able to go to places like private equity a lot cheaper than they are now. The leash is short on a company like Rivian. The confidence is low right now in a company like Rivian. And how in good conscience could you go spend that much money on a car if they're losing $30,000? Like, what confidence do you have that place is going to be around? Like, I'm not suggesting it's going out of business, but on this trajectory, the math doesn't add up. And so they have to start meeting some of these goals.
Right, and I mean, I do see more Rivians on the road. They're not common by any means, because I definitely, when I see one, it stands out to me because they're so infrequently driven, it seems. But they are very cool. I will make that case. I think Lucid vehicles are also very cool looking, but that's not enough. Especially, again, the trust of a consumer with these EVs is they're still proving their worth and their value in the auto market, which is also cutthroat. But I mean, like, when you have a company that operates that is based so much on technology as these are, you need then the faith that the parent of all of your technology of your vehicle is going to be staying in business.
Here's the thing. This is the important piece, because I totally agree. I see Rivians from time to time. I don't think I've ever seen a Lucid. I've seen them online. I think I would notice it if I saw one. they are beautiful vehicles. They're awesome pieces of technology from what I can tell. I've never been inside either. But the key distinction is we're not talking about buying this vehicle. We're talking about buying or selling this stock. And right now, the financials of the company are that this company loses $30-some thousand every time they sell a vehicle. So it's not good when they sell vehicles at this point. They need to sell so many more to be able to make this work, but they also got to be able to make them. Like right now, they can't make them at a cost that it makes the math make sense. So something's got to change, is what I guess I'm getting at.
Something that does have to change, and I think that's why we're seeing such steep selling today, although I would say it's been more of a slow burn in Rivian shares. There was so much enthusiasm and hype around that IPO about 2 years ago that has just since continued to dwindle, and it has been consistent pain for Rivian shares. I think that there was a lot of enthusiasm about the EV market about 2 years ago that has all around seemed to sort of diminish, unless you're Tesla, of course, which is still up over 100% this year.